Hi everyone, I got really huge and exciting news. You don't have to stick through the whole video, but I hope you at least listen to the first portion of the elevator pitch, which is essentially, there's this news piece. Hydreight is acquiring 5% of a pharmacy. That doesn't sound that bullish, but there's much more to it. Essentially, Hydreight, if you guys aren't familiar, and I've mentioned it numerous times, is a company that has the ability to allow other companies to go direct to consumer. Now, this is very tough in terms of regulatory and compliance, so this is quite an accomplishment, and you can think of them as the Shopify of healthcare. Now, I would call it the next HIMS, but this is much greater, much more potential. This 5% equity stake gives them lowest pricing at this pharmacy, and the option to increase to 40%, I'm sure that makes it so they'll soon be buying at cost. Now, you wouldn't be looking for that option to increase unless you're capable, and that's very bullish. But besides that, why I bring up this piece of news is this is not the big thing that's important. They held a webinar discussing this, but they also gave a business update. Hydreight was a dream. 1.3 million orders in 2025. There was skepticism and there was uncertainty. People wondering, how can they do that many orders with zero? How can the CEO even say those things? This is a venture stock. Think of that. This is a venture stock, and a CEO's talking big. What does that sound like? It sounds like a pump and dump, okay? But the fact of the matter is, as news came out, things started looking better and better. All I can tell you is that for a long time, it was we will. We will. In their business update, they told us very forwardly, we are doing 2,000 orders a day. A huge change there. We are. Put that into annualized run rate, and you're looking at over 700,000 orders in a year. About half of what they're targeting for 2025. Now, they're a little bit late to this, but 2025 is not over, and they're scaling very, very quickly. Regardless or not, if they hit their target, this is insanely undervalued. And it's going from what was just a story stock to a company that's executing. Now, 2,000 orders a day, I'm not sure if you guys can quantify that, but I'll help you guys out. Look at HIMS, $12.9 billion company. Hydreight, 99 million Canadian. Adjusting that to make it fair, we're looking at a difference of about 180 times, right, for HIMS. Now, HIMS only has 7.25 times more orders than Hydreight. And this gap is going to close very quickly, but just not much orders, but you're paying a huge difference. Now, HIMS has a higher gross margin, that's true. But the fact of the matter is, what is HIMS? It's a brand. It's nothing special. And what does that mean? Huge marketing. Huge marketing, otherwise there's churn. It's that simple. Hydreight does not need to market. Other folks will market and Hydreight will benefit. They have plenty of businesses under them. I'd rather honestly have the 20% gross margin because I know that's like a genuine gross margin. You know what I'm saying? All this marketing HIMS is going to do, sure, it has a high gross margin. But what can it actually keep without having all this churn? Not much. Not much. Now, this should be pretty apparent that it's undervalued. And I want to also add, Hydreight's small. It's on the venture. It's also over the counter. But this is not a liquid. This is not a liquid, okay? That's pretty important for most people. And I just got to add that. Now, another play that I want to bring up is Victory Square, VST. Now, this is not the data center related name. This is on the Pure Exchange. It's a penny stock, okay? This is the one I'm referring to. Now, they got this amount of shares outstanding and this many shares of Hydreight. Very simple math. You can see they own about a quarter of a share for each share of Victory Square. And the value of that, as of the most recent close, is a whopping 55 cents. Now, this trades at 30 cents, so you can see the discount. Now, this is a holding co, So obviously holding co's have a certain discount. It makes sense. It makes sense. But this includes only the value of Hydreight. Not only does it include only the value of Hydreight, when they have a bunch of other stuff, they get a 10% royalty from Hydreight. Have you ever heard of a holdco receiving a royalty from others? I haven't. Maybe they are, but I haven't. Now, this dirty cheap stock with an insanely low market cap, bunch of great stuff, and a 10% royalty of a company that's banging orders like no other, with huge growth. This is a no-brainer, I feel like. Before it was a story, oh, maybe, you know what I mean? Maybe. And it was worth investing in the story, I'll be honest, because it's the asymmetric bet. This is not even a story anymore. This is legit. As legit as it comes. If you had to ask me today, what is the best risk reward in the market and how do I make a shit ton of money in a short period of time, I would tell you to buy Hydreight. Now, I'm not saying that as financial advice, obviously, but that's just my opinion. Anyway, that's all I wanted to say for today.